What's going on, everybody? Going to be making a quick little video too on basically imbalances in general. Going to kind of break down exactly what we use. So we have fair value gaps, which are a 3 candle sequence, which we're going to go into. We also have BPRs, which I want you guys to think of this as like basically a double fair value gap, which I'll kind of explain. What this actually means is a balanced price range, which makes total sense when I kind of break it down. I'll show you guys. And then we also have volume imbalances. Now, the thing is about volume imbalances is personally I like to use them more on the higher time frame. You're going to typically see them more, on the 4 hour, on the daily, on the weekly, rather than using them on like the 1 minute, right? But in terms of fair value gaps and BPRs, these are the two ones that we mainly focus on in terms of imbalances. So a fair value gap is a 3 candle sequence. So we have candle 1 here, candle 2 here, and candle 3. Now you can see there's a nice body here that's creating a gap between the low of this wick here and the high of this wick here on these 2 candles, right? This is our fair value gap in here. So I'll draw this out from this wick to this wick here, right? Drag this across. This becomes our fair value gap. Now, if we look to the left here, we could see we also have a bullish gap, right? Technically, this is a 3 candle sequence. But why is this invalid in terms of looking for longs? Well, first off, we're trading at all-time highs. That's the first thing. There's no liquidity higher. The only thing that we can anticipate is for this gap to hold and then kind of, seek higher out of this gap. Now, in real time through 10 a.m., this is a very aggressive sell. That's kind of reversing this initial 10 a.m. Buy from the day previously, right? We could see that there's no reaction clearly out of this gap. Now, right, we have a bunch of stack lows down here, right? Just use these 2 lows down here, and then obviously these lows down here. We have more down here, right, if we ever get to that point. But we have this low that we just created as well, right? We are looking for lower prices. Now, what I was talking about, those double overlapping gaps, you can see here we have a bullish gap here, right? A strong buy followed by a very strong sell. This is creating a balanced price range. If this area holds, right, obviously we're anticipating lower. But if this gets a closure above here, right, and this gap becomes an inversion, well, then we can anticipate much higher, right? Because if it's holding this, if it invalidates this whole balanced price range, meaning had a huge buy, huge sell, and then gets bought up through, right? Obviously, we're going to have some kind of impulsive move higher. Now, respecting this area, which is the most ideal scenario, is to come target these lows, right? And that's exactly what happened, right? We delivered to this low, right? And then seeking lower, right? And let's see if this actually ends up getting hit all the way, right? No. So, we sweep this area of, liquidity. What happens? We create a nice little bearish gap here, something too big, right? But it's still significant, right? And we can see that price closes above, right, after sweeping all these internal lows, right? Obviously, we tease this low here. I wonder if we made SMT. We did not. Okay. Right. We close above on this gap. We also come and retrace at 10 a.m. on that 4-hour open, right? Which also showing us some kind of continuation signature off of this, structure here, and kind of with this inversion, showing that this inversion should hold, right? To then deliver into what? Right? This internal high here, right? Maybe the fair value gap fill, and then maybe even all-time highs again, right? Or if structure wants to still hold this gap, right? And maybe we come and validate, this structure here, then we could seek back into the range, right? And that's, see here, we're kind of just holding this gap, right? Until eventually we get a pop, right? And we're not really moving in a sense, right? But we're still holding this 4-hour structure, right? We get a high move, we get a retracement, right? We get a good retracement back in range, and then we, seek that all-time high, continuation move that we're looking for. Pretty straightforward, right? And then once again, creating a 4-hour gap, right? What do we have up here? We have this high, right, from the overnight tap back into the 4-hour gap in the 10 a.m. window, right? And then we'd just be anticipating this high because we're not looking to fade a move like this at all-time highs, right? Just keep it very simple. It's long bias until proven invalid, right? Same thing here. Here we go. We create a bearish gap overlapping with a bullish one, right? We have some kind of BPR range, right? If this gets invalidated, right, we can anticipate a nice move to downside to possibly run these lows. If we respect this gap, then we just keep, our long bias, right? There we go. We get the invalidation point of that 4-hour BPR, right? I'd be looking for lower, and there we go, right? You can see this here, right? Invalidates this BPR, right? And then we get this massive sell, whatever this was. That's actually a very, very strong sell, right, into all these lows. Now, going out to like the weekly, I'll show you guys what a volume imbalance is briefly. So basically, it's the wicks, right? I'll try to find, we have this little one here. So you can see here how the wicks are overlapping instead of the bodies, right? You can see price come back into this area and kind of tap into this and then get some kind of reaction off of it. Wasn't as precise, so I wanted to be, I'm trying to find a good example. You can see here with these wicks overlapping, right? Price kind of taps back into this wick area and then gets a reaction. That's really all it is just basically the two wicks overlapping. Again, it's more powerful on something like the higher time frame rather than anything else because it's like a liquidity void. So it's a pretty decent magnet at times. But in terms of lower time frame, we're not using those. All right, so keeping it simple with gaps and structure, obviously we're gonna dig more into like the models that we use out of these gaps, to obviously deliver into liquidity. Next video will be going over SMT, and then we'll dig into kind of the continuation model in the next one, and then we'll get into the reversal model, which is a little bit different variation of that. And that'll be all for this video. I will catch you guys in the next one.